Global oil prices tumbled Monday after the weekend's historic deal to curb Iran's nuclear program. But will it last? Under the deal, Iran gets an easing in many international sanctions in exchange for a 6-month freeze on its uranium enrichment. Following the news, Brent crude oil fell about 2%. Iran is home to the world's 4th largest oil reserves, but oil sales have plunged by about 60% since 2012, when tough international sanctions were put into place. That amounts to about $80 billion in lost revenue for the country. It's worth noting sanctions on oil and banking remain for the time being, and the deal also doesn't open the door for Western energy investors to do business in Iran.
I think we'll see a bit of a knee-jerk reaction from the market, but I still think that oil will continue to trade lower over time. The Middle Eastern premium, I think, is eroding quite fast.
But Iran will gain access to more than $4 billion in oil revenue frozen in foreign banks. With that, some analysts say to expect the immediate decline in oil pricing to continue in the short term. The Wall Street Journal reports analysts at JBC Energy Markets cautioned against counting on further price declines, writing, "The agreement should be seen as more of a symbolic measure, hinting towards a potential long-term solution rather than a short-term fix on the fundamental side." Despite the weekend agreement, a bipartisan group of U.S. senators is looking to impose a new round of sanctions against Iran. For Newsy, I'm Elizabeth Hagedorn, multiple sources, a broader view.